So the Fraser Valley is more affordable than it's been in years. So why aren't buyers buying right now? On today's episode of the Full Subjects podcast, we're going to be breaking down our June stats package as we hit the halfway point of the year and get into the third quarter or the second half of the year.
Crazy to think that.
Crazy. The Fraser Valley housing market continues to offer some of the best buying conditions we've seen in years. Benchmark prices are down below their 2022 peak by about 26%, depending on area. Inventory has surpassed over 10,000 active listings in the Fraser Valley. Buyers are having significantly more negotiating power, yet sales remain sluggish. So in this episode, we unpack why affordability alone isn't enough to motivate buyers, what's causing people to hesitate, and whether today's market may actually represent one of the best opportunities in recent memory. So if you've been waiting for home prices to come down, congratulations, you bet they have. Fraser Valley prices are now roughly down 26% below the peak we saw in 2022. So inventory is high, buyers have leverage, competition is low. So why are people, Cole, still sitting on the sidelines?
That's $1 million question, Austin. It's hard to understand sometimes, but it does make sense in the sense that there's still a lot of fear out there, right? There's still a lot of concern about the economy as a whole, and making a major purchase like buying a home is a commitment that you have to financially be okay with, and you have to be able to manage that commitment month over month. And I can also sympathize with people that are like, well, I don't know if I'm going to have a job in 6 months from now. So it's hard to imagine that, hey, I'm going to invest all this money into something that I may not be able to pay for in 6 months. Or it's also hard to invest in something when the market is going down, right? The reality is you want to buy into a market when it's down, because we never really truly know when the bottom is the bottom until we're past the bottom, right? So it's really hard to know that, but people don't tend to like to buy things when they're trending down. When in reality, if you buy something on a downside and then 5 years from now it's gone up from when you bought it, you're going to look good. But it's really hard to get over that mental hurdle, I think, is the hardest thing.
Yeah, I think, like we said before, people don't like the idea of an asset being worth potentially less by the time they move in than when they bought it. And, obviously we can't play crystal ball or can't really play God with the market. It'd be pretty cool if we could. So it's really tough to say, like, what, like you said, when is that inflection point where things have shifted, and when did we hit the peak, or when are we going to hit to the valley and things turn around? But with that being said, like you said, if you sit on the sidelines too long and things do shift, then obviously you might miss the mark as well. So it's very, very interesting times. Let's hop into some of the numbers that everyone should know. So let's hop into some of the numbers that we saw in June and some of the context of those. So in total for June, there was 1,147 sales in the Fraser Valley, which is up about 2% from May, but also down about 4% from last year. So sales aren't necessarily collapsing. They're simply just not responding the way many experts expected after affordability improved. So when we look at those sales numbers, let's also talk about inventory. So over 10,000 listings. So active listings hit 10,377. So plenty of selection. Buyers can compare homes. There's less pressure. There's more negotiating room. How is inventory? Like, why is that the big number that matters more than some of the headlines, Cole?
Well, the way I look at it is there's a couple things. So inventory, we always relate inventory to sales. So sales to active listings ratio. Things. That part of it matters because it still puts us in a buyer's market. So from that aspect, that's why inventory matters, because it relates to sales. And it also, you already kind of hit the nail on the head with this one. It's selection, it's options for people. In a lot of cases, you do have the ability to negotiate on price. Now, that doesn't mean that we're not seeing homes that are going over asking price, and we're not seeing multiple offers on some homes. That's not to say that, but generally, you do have more choice and you have more time. I think that's really important too, is as a buyer, you have more time to look at a place, look at more than one place, and not make an offer in the first place you found just because you know that if you wait 2 days, it's going to be gone. Now, those are two very stark extremes, but we saw that. We saw that in 2021, 2022. And the reality is we're not in that anymore. We're at the opposite end of that. And active listings plays a big factor in that because it just means there's a lot more out there to look.
Yeah, I agree, and I think if I can add something to this, we mention this all the time. There are definitely pockets that are doing better than others. There is certain inventory that would be considered doing well or better, as well as obviously some very, very slow areas. So I think that context is important. Like we talk about all the time, the market isn't one big giant bucket; it's a multitude of smaller buckets that exchange with each other. So yeah, right now we're sitting at a sales to active listing ratio of about 11%. Typically, we would consider anything under 12% a buyer's market. 12 to 20 would be balanced. And again, for context of that, somewhere between 12 and 20 homes out of 100 selling, if you think about it that way. And over 20% is what we would consider a seller's market. So again, there's some really strong negotiating power that can be done. And, the language that I'm typically using with my clients right now is, let's try and get tomorrow's price today with lots to choose from, with lots of leverage. And like we talked about earlier, that what if prices do come down a bit more? Because it's definitely possible. With that being said, if you can use that leverage to get even a small percentage point, do a little bit better in that transaction you're transacting in today, like why not do that? Because there's the ability to, and quite frankly too, if with lots of inventory, there's lots of choices, and you do have that leverage of saying, hey, if this is what I'm willing to pay for this property, or this is the reasons that we're willing to proceed. And if that isn't going to work, then we're going to go buy something else. So buyers are kind of coming back with a vengeance. We're seeing this, or I'm seeing this obviously on my listings as well. I'm seeing buyers that I'm working with have some great leverage too during an inspection, or even just getting an accepted offer. So it's definitely great to see. Do you have anything to add to that?
No, I think that's good. I think actually one quick thing. When it comes to sales to active listings ratio, a balanced market is good. I think that's something we should also reiterate, that we don't necessarily want to see a strong buyer's market or a strong seller's market. But what we're trying to say is in those opportunities, if you fall in one of those categories, it may be a better time to jump on something if you're looking to sell or if you're looking to buy at that time. A balanced market overall is better. It's better for everybody in the market, and it's not unreasonable that we won't see a balanced market again. I mean, we're technically only 1% off based on how that's defined, but
totally.
But yeah, I just want to kind of hit that point there, that a balanced market is overall a good thing.
Well,
But
I think if I can add to that even more, obviously we're talking about some of the micro markets and things like that, and it's important to use that information and that leverage when you're out in the marketplace. So like, I've seen it on my listings as well, where maybe something's, I saw another realtor on social media talking about this. It was like 3 days on market for one of the properties that they had listed, and this agent that I know is a really good agent, and typically prices homes where they need to be. And somebody on like 2 days on market came in with an offer $200,000 under ask on a detached property. So I'm not here, sitting here saying that is like way off, because it is possible that home was maybe listed a bit too high, but just because, again, it is quote unquote a buyer's market doesn't mean that there isn't certain product that is doing well. I saw like townhomes under 800K right now, very, very steady product. Detached in Langley under 1.5 of the suite, fairly consistent product, as long as, and again, that's a blanket statement, but certain product, if it's falling into that category, is probably going to move pretty well. So again, just with some context. And on the other end of that, if you are in Surrey Central condos get made fun of a little bit here because obviously, and I shouldn't say that, but they are a more challenging product right now, where that's something that has like months and months and months and months of inventory. If it's one of those listings that you're potentially looking to buy, maybe you do have a bit more leverage there. So it's important, like the context of that, and to use the stats package and your data and solid information from your agent to help determine market value there.
Great. Yeah, that's awesome. Let's jump into prices here, guys. Benchmark price. So we won't go into the definition of that. If you want to know the definition of that, excuse me, Austin can give you that. But anyways, composite benchmark price for all asset classes is sitting at just under 885,000 right now. So that's down just under 1% from May, 7% decrease year over year. And as Austin highlighted at the very top of the show, that's down 26% below the peak in 2022. So prices have come down month over month, and sales have gone up. So that's an interesting stat that I want to highlight there. Sales are going up, prices are still coming down a little bit. I'll break down the asset classes here, and then Austin and I can chat about this a little bit more. So detached is sitting at about 1.35 million. That's down 1.2% year over year, and down about 8%. Sorry, 1.2% month over month, excuse me, and down about 8% year over year. Townhomes, which Austin just talked about, are the strongest asset class as it relates to price. So they're only down about 0.7% month over month, and down around 7% year over year. And then condos, as Austin threw shots at Surrey Central condos there. So their benchmark price, is 476. They're down 1.5%. So the biggest decrease that we've seen month over month, and down about 9% year over year. So again, the biggest decrease year over year.
Doesn't matter about the condos. They're getting bailed out, right, Cole?
Yeah, well, I don't know.
That's sarcasm. We're just gonna pass over that.
Yeah, we did another episode about this, and there's been actually updates on that now too. But we won't get too much into that. But any thoughts on any of these numbers, Austin? I think we're kind of expecting this, not maybe expecting prices go down per se, but just expecting the relative change to be consistent, where townhomes are going to be better than detached and condos. Excuse me.
Yeah, I think the buyers that I find, or that I've crossed paths with, and again, I know there's lots of people that have different clients. I feel like a lot of people, just based off of the numbers, are trying to reach for a townhome for their first place right now,
right?
And kind of bypass that condo step.
That condo, yeah.
Sure. It's very common that people will talk about like the property ladder. So maybe you get into your condo, a couple years, maybe you move up to a townhouse, and then maybe in the future from there you jump to your detached home. And that's historically how things have been and done. With that being said, obviously there's people do different things. You've seen people jump right from condos to a detached home, or maybe from a townhouse to a larger townhouse. Like this is not one size fits all. It never is. But with that being said, I feel like more people are trying to jump to a townhome for their first place. Just a better-ish, I think, if I can say that, style of living. Your garage, your storage, all that kind of stuff. Maybe worrying a little bit less about noise. Maybe if you have a dog or something, or a pet, you have that access to the yard if you're on the main floor. But with that also being said, if you're sitting there and that's a great price point that you've seen the biggest adjustment on, it makes a ton of sense to hop into a condo. If that's, maybe you were in the renting bucket and now maybe you can be in the homeowner bucket, like that's a great option too.
For sure. Yeah, it does really come down to your financial situation. There's so many different factors here. And I was thinking about this as you were talking. There's a cost to transact. So having to move up from condo to townhouse does cost money. But at the same time, you got to look at your lifestyle. Am I having kids? Do I need more space? Again, do the numbers work for me? So there's always consideration of whether I should push a little bit further or I should stay a little bit more comfortable within my budget. And it's hard to really answer that question as a blanket answer, right? It's really going to depend on your situation. And I don't think we should even try to answer that question, but it's important to know that there is opportunities to maybe skip one rung of the ladder there because of where prices are right now. And we just got to determine with you if makes the most sense for you. That's how I feel about it. That's the conversation I would be having.
Yeah, very, very well said. Why do you feel that prices have been softening? Is it like, obviously there's a multitude of reasons. From what you're seeing, what is like the biggest factor that you think is contributing to that right now?
I mean, I think it's demand. I mean, at the end of the day, it is demand plays a big factor in that, because if people aren't willing to buy, then sellers are going to have to lower their prices in order to get a sale. And that's going to play the biggest factor. And that factor is related to, as we talked about before, uncertainty, economic uncertainty, whether it's with your job, whether it's with inflation. All of those factors are still driving buyers' decisions, as well as sentiment within the market, because sentiment is huge. Like, you look at 2022, and the reason so many transactions were happening is because, yeah, interest rates were low. It's because everybody was transacting, and not everybody, but you know what I mean? Like, there was just that kind of momentum, kind of like a wave, right? There's a wave of people that were like, okay, I'm going to buy. And then more people were like, oh, they bought, so maybe I should buy. And then it just kept trickling down to the point where it was just crazy how many people were transacting and places were flying off the market. We're seeing the complete opposite of that now. There's fear, there's uncertainty, and we're not seeing enough people buy into the opportunity, that it's not gaining that momentum for us to see a shift in buying and seeing a shift in sales to listings ratio. So, because at the end of the day, the listings are going to probably continue. It's just whether or not sales can start to drive some of that, or take some of that inventory out of the market, and then balance things out to where we see a balanced market. That's my interpretation of it. How about yourself?
Yeah, I think, why is inventory, like, what would be the main thing? I think there's people that want to transact. I think that there is a lot of people that maybe aren't able to. Like, maybe people are finding that maybe they want to upsize from their condo, but if you bought within the last couple of years, you might be down a bit on that, right? I still think that there is, as much as, like, one thing you find anecdotally with the market is, the longer news is out there, people will read some of that. And sometimes those conversations are easier, for sure. Like, if you've heard that the market hasn't been as good for a while, when you sit down with the seller and you say, hey, this is what that looks like, maybe it's not as surprising. But with that being said, I still think that there is some people that still need to come to terms and to grips with what's happened in the market as well. People's just ideas of evaluations of their homes and stuff. And sometimes it's like, well, where did you get that number from? Like, you know what I mean? I think that's part of it. I think there's, I would say cost, but obviously you can kind of expect that to go up. Like, nobody's, historically, we haven't really ever had housing get more affordable, if you know what I mean. It's like, we've always seen kind of a market that
Right.
slowly but steadily
Yeah,
increases as well. But obviously we've seen, with interest rates changing, things got more expensive, and now that rates have dropped, maybe, like, it is, like, comparing to buying 2 years ago, with rates kind of in the same spot and prices gone down, it's more affordable to actually, like, buy the same product right now, which is kind of crazy. But
Yeah,
that
it
doesn't
is.
help people that already purchased at a higher price point, obviously. um yeah, I mean, I think it's just, I think there's a multitude of factors, and yeah, that's kind of what I got to add. I know I went 15 different ways there, but I think
No, it's okay.
it's a bit of
Let's
a mess.
let's talk about 5 of them really quickly. We've already touched on them briefly, but I'm just going to rattle off the 5, and then we'll talk about any of them if we want to. So, economic uncertainty, number 1, we've already talked about that. Interest rates. So Austin was talking about that now. Interest rates are down, but when you compare them to, say, 2021, they're up, right? And yes, prices were higher at that point, but it still plays a factor because of the sentiment. It's like, hey, I used to be able to get a 1 to 2% rate. Despite prices being higher, rates are now at, say, 4%. That's higher for people, and the payment is going to be higher if you compare the exact same price point, which obviously isn't the case. But interest rates still play a factor. And given that they are higher relative to where they were, say, 4 or 5 years ago, it does play into people's decision making. Fear that prices could fall further, number 3 here. Yeah, they could, right? They've dropped 26% over the last 5 years, 4 years. Why not wait till it maybe drops another 5%? But as I already said, it may not, right? It may not drop another 5%. You might go, wow, I wish I had bought last year when prices were lower, and now they're up 5% and I'm paying a higher price point. So you just don't know. It's really hard to time the market on that. For psychological scars from 2022, so that kind of plays into the interest rate thing, into the market just being crazy. There's that's played a huge factor in sentiment. We've seen a lot of people not want to transact because of fears around what happened then. Now it's completely different than it is. It's completely different now than it was in 2022, but it still plays a factor. And then last but not least, Austin, I think this is really important too, and I hope that we're not contributing to this too much. It's information overload.
We're producing content. We'll just stop talking about it.
Yeah, there's a lot of information out there, right? There's, the market's going to crash. The market's going to rebound. Affordability is the best it's been in 5+ years. There's going to be a recession tomorrow. Nope. Inflation's down. Everything's good. Rates are going to cut. Rates are going to go down. Rate cuts. Oh, no, we're going to see a rate. Like, there's a lot of different information, and it's conflicting information. So it's very hard to narrow in on, okay, what's actually going to happen? And the fact is, we don't know what's going to happen. We only know what we have in front of us, and we can project and we can make assumptions, but we kind of have to use what's in front of us and decide if it makes sense right now to transact. So those are big things that are playing a factor in people's decision making right now. And the reality is I get it. I understand why people would feel that way.
Yeah, well, and so much of it is influenced by like family and water cooler talk. You go for dinner with family, and they're like, "Oh, you're, yeah, oh, you're trying to buy a house right now. Are you crazy? Like the best time to typically buy is when other people aren't." And and obviously that's all relative too. But again, like if you're in a position where maybe you didn't transact in the last, let's say 3 to 4 years, and maybe you bought your place before that. Like I'll give you an example. I helped somebody upsize earlier this year, and I think they purchased their condo in like 2015 or 2016. They were up a couple $100,000 in that time, which was great. And then they got in, they sold, got into a townhome. Like they're in a great spot. It makes a lot of sense for them to makes a lot of sense for them, and they are in a position to upsize and make the most of this market. If you're sitting there and maybe you've purchased within the last couple of years and maybe you don't have as much equity or as much of a lift, that might be a bit tougher. But with that as well, if you're in a position where you're getting into the market, that's going to be a bit more beneficial. So there is an opportunity for different people. Like the market is always good for somebody. You just got to figure out if you're in that bucket right now or not.
Yeah, well said. Let's touch on one last thing and then we'll wrap things up here. Okay. Let's touch on what sellers need to understand. So I'm going to throw this back at you. So I'm going to throw a couple things at you and let's talk about it. So obviously we've talked about inventory being high, buyers having options. So sellers are like, well, it's going to be hard for me to sell. I think it's very fair to say that pricing correctly matters more than ever. And you've already spoke to that. Homes are still selling ultimately. But why don't you just touch on what sellers need to be thinking about and what is important to sellers right now in this market?
Yeah, I think it's just being patient and understanding that, there's a lot of really good agents out there, and I'm an agent admitting this. And, for the most part, what I always tell myself is, and I have this conversation very, very directly with people that I work with. It's like, look, if I'm showing you this information, every other agent has access to the same information. So if I'm looking at pending sales, active listings, like one common thing that I'll say to people when on the listing side is, hey, if there's another listing in your complex, let's look at how we are better, worse, or different. Like they're doing the homework for us right now. Like understand that. Like it's comparable. Maybe there's some slight changes. Maybe there's whatever. But they are doing a lot of homework on the market for us right now. And whether they are successful or maybe they're not getting any activity at all, that is an indicator for us, right? And if they are getting activity, that's awesome. If they are not giving activity, again, let's use that information and apply that to our situation, and that will help dictate where we need to be. Like, if I'm seeing that a certain product isn't moving, if there's any showings on that listed property, they're going to see the same thing. And that is what's going to help them dictate whether or not they're going to be successful in selling or not. So as much as the market can be challenging right now, I'm also seeing stuff that if it's priced correctly, it's getting a showing and an offer right away, because it's like, okay, this makes sense. You found that one buyer in that price point and people act and move quickly on it. So it's, if you test out a price and you kind of like see what happens, like hope is not a plan. This is not the market for that. Yeah. Does that make sense? Do you have anything to add to that or any thoughts?
No, it does. It's more important than ever to be prepared when it comes to selling your home. And we're not here to try to create fear with, hey, you're never going to sell your home because buyers aren't moving. That's not the reality of it. We're trying to show that buyers are in a strong position and sellers can also be in a strong position, but they need to do the things right in order to put them in that position. I think that's really what you're trying to say. And it's important to ultimately work with people that are going to help you get into that position. That's our little plug at the end there.
Very well said.
Let's wrap things up here, Austin. If you don't mind. So markets don't usually announce that the perfect time to buy. They're not going to say, hey, look, now's the perfect time to buy until it's already come to pass. And we've talked about that already. In reality, often the best opportunities are when things do feel uncomfortable, right? You're a little bit worried because of all the issues that we've talked about today, but that's what's keeping competition low. And that's what's giving you the power to get into the market at maybe one of the best times you'll ever have. We don't know how things are going to look in the future. Prices are obviously lower. There's no question about that. What you kind of have to ask yourself is, what are the perfect conditions for me to get into the market? And do I need those exact conditions to get in? Or are there, let's say I've got 10 things I really want in order to get into the market, and those can be specific about the property, or they can just be about the general situation that you're in. And that could be financial, emotional, whatever that might be, and decide which of those you need to achieve in order to make that decision to get into the market, because perfect is hard to come by. And often you'll look back and go, wow, I wish I had done that, because it actually was as close to perfect as it will ever be. Negotiating power is the highest it's been in a long time, in the last few years for sure. And those are things that definitely need to be considered when making that decision. Anything you want to add, Austin?
Yeah, I would just say, like, we're talking about individual situations. If you're wanting that financial checkup, let's call it, and you want to figure out, maybe what your place is worth, or how much power you have on the financing side, don't hesitate to reach out to either of us. Obviously, for their respective strengths, if you know what I mean. So reach out to Cole for the financing stuff. Market wise, I'd be happy to answer any questions that you have. But yeah. Have an awesome rest of your week, guys. As always, the podcast is for informational purposes. It's not constituted as legal advice, financial advice, investment advice, anything like that. It's not intended to cause or induce breach of any existing agency agreement. So if you're already working with an agent or a mortgage broker, we're not trying to steal you, for lack of a better way to put it. And as always, guys, if you found this useful, please share it and leave us a 5-star review. We do appreciate it. And we will see you next week.
Thanks, guys.